The message is that they can do it again. The message is that they can go on and speculate on the implicit subsidy, the implicit insurance by the taxpayer. And this is happening all over again. Look, for example, the refinancing conditions of the Deutsche Bank. It's one of the banks which I studied quite well. According to its balance sheet, it has a leverage ratio of 1 to 52, I think, more or less. That was from last autumn, when last time I did the calculation. The same time, if you look at the exchanges, how are the bonds rated and how much interest Deutsche Bank has to pay. You know, from the leverage ratio, it's a high risk enterprise. If you look at the interest rates they have to pay for refinancing, it must be a low risk enterprise, because they get the money for 3.5%. That was the last when I looked a month ago. 3.5%. That's a low risk enterprise. So, and this can only be because it's quite clear the German state will never let the Deutsche Bank fail. It is as simple as that. And you don't even need rating agencies for creating this thing. So the basic message is, if it's not completely crazy, and the Cyprus bank were completely crazy, you know, they have invested in Greek state bonds in a time when it was already 100% clear that there will come a haircut, because in summer 2010 the Greece state debt to GDP was already beyond 150%. So everybody knew there will sooner or later be a haircut, and it was in this period that the Cyprus banks invested in big scale in Greek sovereign bonds. So they were simply crazy. They had no idea. Probably they thought that the other Europeans would then bail out. This will not happen again. But what about the global mega banks based in Europe? What about BNP Paribas, Crédit Agricole, Société Générale, Deutsche Bank, well, Commerzbank is already state-owned, Santander, Unicredit, Banco Bilbao Vizcaya. These banks are simply much too big, too highly leveraged, and it's only a matter of time when it will happen again. The problem is, the big majority in Germany until today has no idea that it is our money which is defended in all these rescue actions. Yeah? Because it is the Germans who have most at stake. Because we have generated all this excess wealth by our trade balance surplus. Yeah? So all this money earned in 10, 12 years of trade surplus from Germany and all the other Euro countries has been accumulated as assets in the deficit countries. That's the basic problem of the Eurozone we have. Now to the other questions. Didn't we have to do all this because otherwise the stability of the system could not have been saved? That was your question. We had no choice. Maybe. The problem is, because up until today it is completely secret who were the beneficiaries of the bailouts, we cannot have an informed debate about whether there would have been a whole euro crash. Take, for example, Ireland. When Ireland ran in the second level of the crisis in autumn 2010, the Irish bank bonds were dealt at 40 to 50 cents on the euro on the international market. And it may be assumed that a big part of the Irish bank debt, the Irish bank bonds, which are repaid until today with taxpayers' money, or with taxpayers' credit, you may say, that a huge part of this Irish bank debt had already been sold to American hedge funds. That no longer European banks really were in big scale in the Irish bank business anymore. Because by their own investment rules, they were forced to sell at fire sale prices because they were not allowed to hold bank bonds which were junk rated, on junk status rated by the rating agency in autumn 2010. But it's only a guess, you know. I don't know for sure who were the owners, but maybe the owners of Irish bank debt already in autumn 2010 were investors who could easily have afforded a loss, and which would have not been when they would have been forced to take the losses. Maybe it would have not been the loss of all the other European banks. We simply do not know, and that's my accusation. Yeah. That the public has never been informed about who really benefited, who were the beneficiaries, and by this we could not have really a public debate and a democratic decision about how to solve, for example, the Irish crisis. The ECB and the national regulatory authorities did allow for a credit expansion beyond any sensible level. You remember there was this big euphoria in the financial system in the years up to 2008, and everybody thought that the price for real estate would grow infinite, and by this Irish and Spanish banks could credit every kind of real estate investment, even the nonsense we've seen in the film. And it was very easy to refinance this investment because the Germans, the British, the Swiss, the Americans and the French were ready to invest in covered bonds on real estate all over the world, and especially in these boom countries. So that's how it happened. Is it realistic that all this debt will ever be repaid? The idea to have a currency union without political integration was a bad idea. The problem is now we have it since 12 years, and the way back will become quite difficult, to say it very loosely. There are three different ways how to overcome the current troubles of the euro. The first is, let's dissolve it. Back to national currencies, maybe start with Italy. The problem is, if we do this, so far no economist and no expert has demonstrated how we can organize this process without producing chaos, without producing a severe recession in all the affected countries, and without having enormous diplomatic or even warlike rivalries between the affected countries. Just to illustrate the problem. For example, if Italy would leave the euro, which from a national economic point of view would make sense. For Germany as an economy, it would mean that all the assets which the Germans have in Italy, which I assume is around 300 billion, in which are denominated up until now in euro, and to make sense of an exit of the euro, all these assets, or from an Italian point of view, debt, it should be redenominated in lira. And then the lira would depreciate by 30%, 40%, nobody knows. It would mean that all the German owners of assets in Italy would lose 30 to 40% of their assets. What would that mean to European integration? Just let your fantasy run how different governments would react to this kind of scenario. So to dissolve the currency union, I think, is at least politically extremely dangerous, and we should try everything we can to avoid it. But the idea that we can solve the euro crisis without cost to anybody is a no-brainer. Yeah? It will cost a lot of money, especially the Germans. And my preferred personal solution, you asked me, my preferred personal solution is we create a collective debt redemption fund. This debt redemption fund will incorporate, or will buy, you may say, not only the 60% debt of all state or member states of the euro, but also at least a part of the private debt. Because in many countries, in many euro countries, it is the overall debt, state debt together with private debt, especially household debt, which poses a problem. For example, Ireland has an overall debt in relation to its gross domestic product of over 300%. It's completely impossible that Ireland will ever repay this debt. It will not happen. So we need some kind of transfer payments. So how this debt redemption fund, would be refinanced via Eurobonds to have a common interest level, but how to pay for the redemptions? And my proposal is the proposal which a leading partner of Boston Consulting presented already 2 years ago. We need a coordinated European wealth tax for high wealth owners above a certain threshold. You choose it, half a million. Yeah? It would be for different countries different numbers. For example, for Germany to overcome its overall over-indebtedness would mean that wealth owners would lose at least 14%. In Italy, it would be 30%. In Ireland, it would be more than 100%, so impossible. Somebody else must pay. So we need a coordinated European special wealth tax to cancel this debt or to pay for this debt. And you may say, well, impossible to do. It means that Enteignung. Sorry, what do you say for Enteignung? Enteignung. Yeah, it means expropriation of owners and so on. But you can argue that or we do this, or the alternative will be a euro crash by which all these owners of high wealth will lose a lot more. The problem is, if one side has too much debt, the other side has too much assets. Because always where is debt, there's also an asset. You asked me for my solution, this would be mine, because by this we could overcome the over-indebtedness of many countries. Well, technically, or basically, it's correct. The money the ECB has lent to the Irish government to make the Irish government repay the creditors of its failed bank, the ECB created money. And this money already was in the system since 2 years when I asked the economists who made this proposal. So if the ECB would cancel this kind of debt, nothing would happen. That's what Mr. Gurdjieff called monetary magic. Yeah? It is the possibility for a monetary authority, a central bank, to create money, and this money already has been created. Of course, the problem is you have a precedent. If you give the Irish government money and cancels this debt, everybody else will want to go for the same way. So it's difficult to argue. Cyprus. Isn't Cyprus a game changer to the whole system? Yes and no. In Cyprus, what you have to bear in mind is the amount, the volume of debt of these two banks was so high that even with the most optimistic assumptions ever been taken by the Commission and the IMF, it was from the beginning very clear that it was impossible to give the Cyprus government enough credit to bail out all creditors of these over-indebted Cyprus banks, because there was no way. If they would have given the whole 17 billion needed to the Cyprus government, the state debt of Cyprus would have grown, I think, beyond 170% of GDP of Cyprus. So it would have been clear from the beginning that a haircut to this now debt to other Euro states would sooner or later had to happen, and politicians could not have argued against their own or before their own parliaments to give this credit to Cyprus. So they had to find a solution, and then they found the solution with all the account holders with money more than uninsured, volumes above 100,000 euros shall be held responsible. Why it was so easy to do it? Well, you may answer in a cynical way, because no German money was involved, or very few German money was involved. Maybe if a lot of Germans would have invested their money in Cyprus, and not only some tax evaders, maybe the story would have gone different. I'm not quite sure, because of the high numbers. And then there was a question about the monetary system in general. Isn't the fiat money itself the basic problem? If you do answer yes, you have to know what is the alternative, and I don't. I don't know what is the alternative. I prefer a fiat money system which is highly regulated. For example, in the run-up to the crisis, what happened in Spain, in Greece, in Portugal and in Ireland is the inflation rates there were much higher than the inflation target of the ECB of 2%. For example, in Spain, in some years, it was nearly 4%. So the ECB should have intervened in Spain and in Ireland against the credit expansion of the banks there. And it could have done that. It could have, for example, arranged with the national authorities of Spain and Ireland that the obligatory reserve holdings of those banks could have been increased by 10, 20, 30% to stop the credit expansion. With orderly regulatory oversight, it would have been possible to stop this real estate booms or this property booms to run. But in this period up to 2008, they still believed in the efficiency of the financial market. That was the mistake, and not the fiat money system itself. For institutional investors as investment funds, yeah, or life insurance companies and so on. So basically it's private wealth which is at stake in these crisis countries. It's not only banks themselves. Banks act as agents for those who have the money to invest. Yeah? So, and it's important, because banks are an abstract thing, are an institutional thing. But behind this money, what the banks manage, are individual owners of this money. And this is always hidden. Yeah? Of course, you may say, wouldn't there have been the euro? The interest rates in Ireland, Greece and Portugal and Spain would have stayed much higher, and the whole property boom would have never happened. Quite right. But there were reasons to create the euro. Do you remember? Do you remember who was, or which nation, which government was who really wanted very urgently a common currency? France. It was France. Do you remember why France wanted it? Because they didn't want to follow any longer the diktat of the Deutsche Bundesbank concerning monetary policy in Europe. And do you remember this currency exchange chaos we had in Europe in the 20 years before we had the euro? Do you remember what this meant for the affected countries? That they all had to follow the German diktat and appreciation for not to lose money. So, you know, there were reasons to create the euro, and we should have done it right. But to say the euro was the origin of the crisis and so let's get rid of it, it doesn't solve anything. We only get back to where we already were in the 70s and 80s. So I think that's not real progress. As far as the wealth tax, it would not be fair to all those who invested wise in real estate or what else, or in corporations and so on. Yes, you're right, it wouldn't be fair. Do you have a fairer solution? Because the problem is, if we let the euro crash, they will all lose money. Even their investment in real estate. If we have a decade-long depression in Europe, everything will lose in value, independently of in what you have invested originally. So my appeal is, bear in mind, what is the alternative? What is quite sure, the solution to the over-indebtment of many countries in Euroland, and I do not talk only about state debt, but also private debt, it's very important. The solution to this over-indebtedness will not be costless. It will cost a lot of money. And what should be done, and what I haven't seen so far, is a realistic calculation of the different scenarios. Who will pay for which scenario how much? There have been made some studies about dissolution of the Eurozone in Germany, but they have been made from a very German perspective, to warn the German public that we would lose money. But this is not a pan-European argument. What we need is a real European study from economists from several European countries, which calculate for everybody transparently what are the different options we have. And the four options technically we have, or we can inflate. For inflation, you will never get a majority, I'm quite sure. And inflation is even much more unfair than a wealth tax. The second solution is dissolution, exit, one country after the other, a North and South Euro, and so on. The third option is growth. Oh, we need a growth miracle. 10 years, 4% growth, everything is solved. Probably won't happen. So the fourth option is the debt redemption fund paid for by those who were the winners of the boom before. I think there is no other option, at least as far as I know. I haven't heard of one. So we have to do the debate about this. And what I would really like to see is a calculation, dissolution or division in a North and South Euro, you may call it, or redemption fund and wealth tax. Which of these both options is more costly to whom? And only if we do this calculation to the best and with the best experts we have, only then we will have an informed debate and we can come to a democratic solution. The way we do it now, muddling through, makes it worse by the day. And the bill will be even higher the longer we wait, because it builds debt on debt on debt. But we are already over-indebted. Now, there's a very plausible thesis, you may say, when the overall debt, state and private household and private enterprises in a national economy is above 180% of GDP, then it's too much. And it will, in a low-growth country, it will probably never been paid back, only by economic production. So we have to find a solution for over-indebtedness, sooner or later, or in a crash, or in a managed process. The combination of debt and generation and passing debt to the next generation from an economic point of view makes no sense, because you always pass also the assets. You know? Because one man's debt is the other man's asset. And
depending on what you do with debt, I mean, if you play casino with debt, it's not the same thing as investing in a high-speed train or renewable energy. It's not exactly the same kind of assets that you fast.
I completely agree with your environmental and social debt, because this is really transferred to the next generation and there is no way. But in financial terms, the next generation always inherits all the wealth as well.